Yo, what's up, guys? It's Hack Trades. I hope you guys are all doing well. Let's talk about our trade recaps for yesterday, January 8th, and today, January 9th. The recap of yesterday's trades, in all honesty, of course, I'm going to make a recap on them, but they were very quick scalps using order flow. As I continue to use these softwares more, I will make videos on how I use these, how I really track volume, how I'm able to read the buying, read the selling. And as I get more adapted and I really pick up these softwares to enhance that and make it easier to teach, I will definitely make more videos on that. But yeah, these trades, let's just recap yesterday. Yesterday was just a straight up continuation day. We had VWAP above. We had higher time frame reasons to come lower. I was actually a little neutral into the session. The first 10 or 15 minutes, I kind of just let us do our thing, and then I started to take some really, really good trades. So you'll see here, yesterday, I want to say we booked closer to 100 and, let's just do the math here on these three trades. About 40 points. Then you got about 48. And then I think this was about 70. Yeah, so I was going to say we booked around 180 points. I want to say we were close to 160, 170, just off of that rough math. So it was a really, really good trading day. No losses yesterday. Really, really clean. This first trade was just simple EMA movement to the downside, respecting gaps as we went down. You can see in this model, literally just staircasing under the EMAs. We got a 30-second, 1 minute, 2 minute breakup structure. And that took us to the downside, and it was super, super clean. This just absolutely flushed. We had a lot of volume come in here, and then we got to our PT. I did want to see us kind of hold this area and try to chop back higher. So we did fall below it into the second trade. I saw a lot of buying come in at this low. You can see I already had this low marked out. This was a big level that I had marked out. I saw all the buying come in up here. This candle closed here. All we did, let's put our stop below these two bodies. The stop actually was down here at first, and then as we started to accelerate, we hit our break-even level here, which is that dotted line you see on the screen. This was our break-even level. We got a really, really good entry signal here, really just for the momentum bounce with the order flow, with coming back within the trend. Could this easily have went back down? Yes, but how we're using the EMAs, especially the 1 minute, 2 minute, but of course the 30-second here, we had a lot of, after this sharp move down, all we were looking was for a little relief bounce, and this is why it's a tight stop, because it's a little risky of a trade, but I have the order flow, and I have the reasoning, and I'm in the moment, I'm taking the trades, I have the confluences, I'm checking the boxes as I take this trade. I would say out of these three trades, this one was the lowest probability. I will admit that, but of course, it was also the best RR, and of course, if you're going to take a lower probability trade, it's not a bad thing to have a high RR because you're not risking that much. I wasn't risking that much on this trade. I just made about, I want to say closer to 500 on this trade. I think I was risking, when this was down here, I was risking about $160. When I dragged this up, I was risking about $80. We caught a really, really good about 4.5 RR on this trade. Just continuation. Like I said, we hit our break even, dragged this up. Once we got this first impulse candle to the EMA, I did drag the stop right here. That's why you see the stop there. And then, like I said, we went break even right here, and we just soared right to our high. All I did was target this liquidity right here, as you can see on the screen. And then we continued to hold. On the 1 minute, 2 minute, we did leave a gap, so we decided to chop back down. And then all I did here, this really should be adjusted on the screenshot, but this line really should be here. You can see the trend line liquidity. The same reasoning that I took this first trade was the same reasoning I took the third trade. We left behind a little 30-second, 1 minute gap above on this one to protect our stop. We broke out of this slight uptrend that we were trying to come into. In that scenario, right, when you start to bottom out, you do want to start to see those higher lows. That's what kind of starts to happen, here, higher low, and then you break through, you get your breaker structure right here through that area, right? Imagine the line drawn here. Again, sorry for that, but we fall through there. We start to reject this area. I see rapid selling come in as we lose that area. We have the EMAs pushing down, and we have that 30-second, 1 minute gap. We just put the stop there, and we ride to new low a day, and that was exactly what we did. So within that, I want to say, what is this? About 26 minutes, we caught 180 points. So about 70, 50, 40. Very, very clean trades. I mean, there's really not too much to say. With yesterday's executions, it was pretty straightforward. And all it was just catching continuation in the moment, having gaps protecting your price, having the EMAs pushing down, having the draw lower, having the bias lower. There were still lower draws that I wanted to see that did get hit, and it was pretty clean. So that was yesterday's session. Let's get into today's session. Let's talk about it. Really, in these first, let's see. So this is about market open right here, about 9:30. In this, you can see this all was pretty ugly. Market open, you can see we dumped down here, we bottomed out here. That was completely fine. We still left behind Asia low, so I noted that. We weren't really respecting VWAP how I would have wanted to see today. So during all this, I did try 1 or 2 entries. I got stopped for a very small loss and then a very small win. And then I was like, you know what? Let's just take the hands off. Said it on stream. Let's take the hands off. So I kind of did that through all of this. We still had a 5-minute gap up here that we were holding. And I still had higher time frame draws on liquidity and reasoning to believe that we wanted to go lower first before higher. More specifically, it really was that Asia low. There were some more draws to the lows, but I was just worried about Asia low. There was a point in this trade where I was actually expecting to maybe hold this 80, 90 points to those new lows into about the 600s and the 590s. But I didn't, and I'm happy I didn't because we took our piece. We basically bottom ticked, and then we reversed whatever that is, about oh my gosh, about 240 points we ended up reversing off that. Wow. That's wild. I didn't even process that. And that same trade I showed you yesterday, this is basically what this is, guys. EMA is pushing down, trend line liquidity, clear draw to the lows, and just getting that break of structure through this area. Look at it, guys. The break of structure through that area. Look at this. Look what it did. It presented a 30-second, 1-minute fair value gap to protect our stop. That is exactly what happened. We went break even here. As I always do, break even at the internal low. We went break even right there. We didn't even need it because we absolutely flushed that 1-minute candle. Got a lot of volume right to our draw on liquidity. And when you see the volume come into your draw on liquidity, there's really not a better feeling because you know that your draw is right. You know the trade makes sense. Everything checks out. And you're in profit and you're green and you're very happy about it. So that was a very, very clean trade. Now this one is the one I want to talk about up here into about 10:18 here. I basically just about ended the stream and I actually got the setup that I wanted to see. The one reason I was very iffy about not taking this trade is because we were not respecting the VWAP. But what we did here was reestablish ourselves back in this trend. Again, we have higher draws on liquidity, which we ended up just taking out now. Of course, I wish I was in that trade. And honestly, if I dragged to those higher draws on liquidity to about the 840s, I was targeting about right here, 97 points. But I even wanted to just take out this equal high and take profits because I took it on an option as well. Unfortunately, on the option trade, I mean, we still made a little money. But my idea was to go break even, initially go break even at this internal high inside of this fair value gap. This was also where the 5-minute fair value gap was. This poses an issue to me because there's also a 1-minute gap, and you can see the manipulation was above the 0.5 of this. Now, in hindsight, I probably should have went break even here, but because of this price absorption with all this price absorbed right here on the 1-minute, that was holding us down consistently below this 1-minute and 5-minute gap, I did go break even here, unfortunately, right in this area. And as you can see, I went break even a little early. I got stopped in a little profit on options, and I got break even on this trade, and this trade ran without me. So I did make about $70 on options. I just kind of took the piece off the table because I was like, I don't like how this is moving. And then, I did go break even too early, and this will be in the journal, of course, for our really clean model. 1-minute gap, 2-minute gap. You have the gaps below. You have the EMAs trending. EMAs crossed over the VWAP. This is my continuation model with the EMAs crossing over the VWAP, of course, as you can see. And yeah, that's all that happened. I really just miscalculated my break-even level. If this was my break-even level, I would have hit full PT and potentially even dragged. I probably would have made, if I held on options, I probably would have made $400 on options. If I held this on futures, I probably would have made like 600 times 2. I was literally done for the day, and I saw that this was literally my A plus lower time frame plus higher time frame model to opposing draw on liquidity after taking out lows. I have all these models, marked out, and I have all these models back tested with data. I continue to add more and more data to these models. I really have 4 main plays in my playbook that I take. One being the downside continuation model, and then the EMA crossover for upside continuation. Those are 2 out of the 5, and the VWAP bounces and stuff like that. But yeah, that was tough. This is definitely a little bit of a tougher pill to swallow because I definitely missed out on 82 points here down the week. But nonetheless, on a week that I honestly thought PA was mid, if I'm being honest, out of 10, I thought PA this week was closer to like a 7. To start the week, I actually did pretty well in the first half of the week, even with PA that I would give like a 4 out of 10. I just didn't think it was good. And then definitely, today was NFP day, so you have all this volatility. The volatility is amazing, but you guys have to remember, right? On a day normally Monday, Tuesday, we were moving kind of slower, where most of you would trade 5, 6 micros. On a day like today, you probably should be on 3 because look at this. I mean, this is just from 10:06 to 10:35. It is 30 minutes, but that is like a 200-point reversal, 200-plus point reversal. And again, it's really, really good if you can manage it. But for some of my newer guys, you want to be careful on these days. And when you see more volatility, yes, it does mean opportunity. But like the video I have in the WAP and what I talk about all the time, it does mean opportunity, but at what cost, right? Because a lot of you, when you're catching 40 points on 5 micros and you're trying to build some buffer in your accounts, that's completely fine. But when it comes to, each 1 minute candle is moving anywhere, most 1 minute candles from basically open to like 10:30. Most 1 minute candles were doing anywhere from 15 to 25 to 30 to 40 points. Like this candle, for example. I mean, this is, obviously strong volume regaining this area, but that's like a 55.1 minute candle. It is something that you have to get reps in doing, and the best way to get reps in doing trading big candles like that, especially on the lower time frame, is sizing down. So that's what it's going to be. Just keep that in mind. But yeah, really, really good days. Green days the last 2 days. We actually did not have a red. Did we have a red day this week? I want to say we had a break-even day. I don't think we had a red day. But either way, we're ending the week green. So even if we did have a red day, it was a great week. So really, really happy about our executions. Hope you guys enjoyed this trade recap. God bless. Peace.